starting tomorrow, several important regulations will kick in from 1st of April, the start of the new financial year. The new rules will define how we earn, spend or save money. Many changes in the income tax rules are effective from 1st of April. Changes in income tax slabs to tax rebate limits. LTCG tax benefits on debt mutual funds are some of the major changes that will be effective. We are hoping to discuss all those changes and more. With me is my colleague Karthik. Karthik, to begin with, the new income tax regime will kick into place from tomorrow onward. What does it mean for taxpayers?
Well, nothing really immediately. It kicks into place from tomorrow, 1st of April 2023. But you'll actually have to take a decision on whether to go for the new, which is the default tax regime, or the old tax regime only in the assessment year, which is going to be around 31st July 2024, unless the deadline gets pushed and extended as it usually does. So, so I think critical changes announced this year in the budget in the new tax regime. Remember, the old tax regime was not even touched. It wasn't even mentioned in the budget speech, except for the fact that while the new tax regime becomes default, the old tax regime is something that you could still opt for, and you could have all your basic exemptions and standard deductions built into it. So, I mean, we can quickly run through the rates that the finance minister had announced in the budget, and thankfully, no finance amendment bill has changed those, while there have been other changes that we can come to. So, no tax for 0 to 3 lakh rupees. It was, the basic exemption was 2.5 lakh rupees earlier. That has been increased to 3 lakhs. 3 to 6 lakhs, 5%, and so on, a 5% increase for every 3 lakhs of salary. So 0 to 3, 0%, 3 to 6, 5%, 6 to 9, 10%, 9 to 12, 15%, 12 to 15, 20%, and 15 upwards is a 30% tax. Now, what has also happened in the new tax regime is that the surcharge, maximum surcharge, has reduced from 37% to 25%. Of course, that is something that impacts and makes a positive dent on the ultra rich. And apart from that, of course, like I said, you have the option of choosing between the two tax regimes. Now, there's a very interesting calculation that I was making before I came into the studio. Up to 7 lakhs, there is no tax, right? So your basic exemption, which was 5 lakhs earlier, has now been increased to 7 lakh rupees. Now, the point is, up to 7 lakh rupees, you don't pay any income tax whatsoever. But if your salary goes up by 100 rupees in a year, if your salary becomes 7 lakh and 100 rupees,
okay,
you don't pay a 5% tax on that 100 rupees. In fact, you come into the bracket of the 7 lakhs upwards, which means all the slabs kick in. So for somebody who's earning 7 lakh rupees, there is no tax. For somebody who's earning 100 rupees more in a year, the tax liability actually goes up to about 25,000 rupees. How? Because then 0 to 3, you don't pay any tax. 3 to 6, 5% tax, which is 15,000 rupees. And the balance of, let's say, 3 lakhs to 6 lakhs, you pay the 10% and so on. So when you calculate, it's a dent of about 25,000 rupees of tax for a 100 rupee increase in your annual salary.
That's very interesting. So anything over 7 lakh is going to have a dent on your income.
And all the tax
and all the tax slabs will kick in.
That's right.
Also, tax rebate limit raised to 7 lakhs essentially means that if you're earning less than 7 lakh, you need not invest anything to claim an exemption.
Correct. Absolutely. So no tax whatsoever. If your total income is under 7 lakh rupees, nothing to be done. It's a zero tax return.
Okay. I want to talk about this very interesting LTCG removal on debt mutual funds that was announced very, very recently. Will also kick in from 1st of April onward. What does it mean for investors?
Okay, so we had a very long debate on that, and I think I'll request our viewers to sort of, go back to about 5-6 days ago and look at our video. So we had an excellent panel of Lakshmi Iyer, Gurmeet Chadha, and many other experts joining us. But broadly, what the Finance Amendment Bill has done this time around is that debt mutual funds have lost their sheen completely, which means they no longer provide that indexation benefit, which was a great tax benefit for people who were investing in the long term, and long term was defined as 3 years and upwards in the case of debt mutual funds. So in a debt mutual fund, you would stay invested for 3 years. Your tax outgo would be calculated as LTCG of 20% on a debt instrument. And on top of that, you got the indexation advantage, and that indexation was primarily the dividend that has accrued on your investment minus the inflation. So a 1 lakh rupee invested giving let's say a dividend of about 8 to 9% over 3 years versus inflation at about 5% per annum, which means you paid tax only on the dividend minus inflation. Now that has gone completely, and the 20% tax LTCG tax has also been reduced, which means it will be equated with equity mutual funds, which are taxed at 10% LTCG. So overall, it is a debt mutual fund is more comparable with a bank-linked fixed deposit now when it comes to taxation. And if you were to compare the LTCG benefit, then that of equity mutual funds at 10%, which is any holding more than 1 year, that sort of applies for debt mutual funds.
Okay, and that also kicks in starting tomorrow.
That's right.
Another interesting thing, and we've discussed this before, for high net worth individuals who were queuing outside, big luxury apartments, for them, the capital gain exemption by reinvesting in luxury apartment, and the deduction is currently now tapped at 10 crores starting tomorrow. So that means that people who want to buy luxury apartment, today is the last day if they want to avail some sort of benefit.
Absolutely. So very few hours left for the property office to be open. So I think anybody who would have wanted to reinvest that capital appreciation hopefully should have done it already. But otherwise, these are ultra rich people. It doesn't matter if they pay a few lakhs extra in taxes.
Okay. So some very, very interesting taxation laws that will kick in from tomorrow, which is the start of the financial year, and you can look them up. You can also go visit our discussions that we've done earlier today and in the subsequent last couple of 3 or 4 weeks to understand where and how you can save money in the months to come.
And the standard disclaimer, Shweta.
Yes.
Consult your CA, consult a registered financial advisor before taking any of our suggestions too seriously.